Hello everyone, this is Richard K from Price Action and Income, and in today's video I want to discuss breakout trades and more particularly how I approach them using my own strategy. Now there are many different strategies that involve entering a position at a breakout point. Now whether it is a previous swing high or low or whatever it might be. And that these breakout trades are normally done at important levels where traders believe there will be a continuation of a trend and often think that there should be enough momentum to carry a trade way beyond the entry point. The problem is, though, that if breakout trades are not done correctly, that you run the risk of a reversal taking place against you, especially if you think that a great breakout trade will occur at pivots or levels taken from a larger time frame like a daily or a weekly. Another problem with breakout trades is that larger institutional traders will often run stops at important levels for just long enough to get the beginner retail traders stopped out of their positions so that they can fill larger positions and then eventually trade in the direction price was going to later on. Now let's look at a chart of Australian dollar, US dollar, for example, to illustrate these problems. You'll see here on my weekly time frame, this could obviously be a daily time frame as well, whichever time frame you might be looking at, but just very quickly give you an overview of what I mean by the dangers of taking breakout trades. Now, you could probably see here that since late 2008, price was coming upwards. Now, whether you were long and you hopefully made some money, that would be great if you do trade this pair, but let's say price corrected lower, and at this stage, you would have thought like, listen, this trade is still in an uptrend. So price shot up higher. What do we normally get when price goes into what direction? It doesn't just continue higher. We normally get a correction lower. In this case, created a higher low and price moved upwards again. But this is where price failed to actually break this high again. And you can see it tested it once, twice, third time, fourth time, fifth time, and reversed sharply lower. And this is a great example of where guys that were originally thinking this is going to go higher and weren't entering here at safer levels at the lower side would probably take, or beginner traders would try to take a breakout trade at these highs just to get price reverse against them, and they would lose. Now at this stage they'll probably throw in the towel, price coming down, and they'll say like, listen, okay, we are wrong, we're probably going to get a deeper reversal lower, and what happens when price takes out this pivot, price pips it and reverse up again. And these sort of things, and if you're not used to how patterns evolve, etc., and you're simply taking breakout trades, they can be very dangerous. Like I said, if you do take them from daily time frames, or if you're not aware where these levels are on daily or weekly time frames. Here's another example. Prices reverse higher. It fails to take out this low, reverses a little bit higher, and eventually it starts dropping. Then we have a few smaller occasions over here where prices fails to continue with this momentum and reverse slower. Again, this guys is a weekly time frame. A lot of guys would have get stopped out very quickly if they had too tight stops. And on a weekly time frame, for example, small moves like this would be quite big on a smaller time frame. It obviously depends on what your strategy is and what sort of stop losses and targets that you use. But this is just a very quick example, and these things happen on smaller time frames as well. It gives you a really good idea of how dangerous it can be if you didn't enter earlier on into a trade targeting a previous high and just basically think that price basically proving it wants to go high, it broke this high over here, you get into a buy order and immediately price reverses lower again. Now, in the end, I can go on and on about the dangers of breakout trades, and I'm sure that there are many successful traders that take breakout trades all the time, but under very specific conditions. Now, whether they were following a chart pattern or the indicators not showing overbought or oversold conditions at the entry points, just make sure that when you do attempt a breakout trade that you are fully aware of where previous important pivots were situated on a larger time frame, and that reversals can easily take place at those levels, like I just showed you on my weekly AUD/USD chart. So how do I take breakout trades? Well, firstly, all my subscribers probably know by now that I like to trade with the trend and enter positions at the end of corrections within such a trend. And to illustrate what I consider to be a much safer breakout type trade, I would like to show you an actual setup that was taken on stock automatic data processing, or ADP for short. Okay guys, here we have ADP, and it's on one of my favorite time frames, 240-minute chart or 4-hour chart. And I was watching ADP for quite a while, and you guys know that I use a lot of market geometry, like the pitchforks, for example, to see if I can spot the end of a possible correction before I trade with the trend, just like I mentioned before. And just following a little bit of market structure, I could see that ADP has been in a very long-term strong trend going upwards. So I've just zoomed into price action a bit more, and I thought that we're going to have probably another wave going higher that could potentially reach very important levels on my pitchfork that sloped in the direction of my trade. Now I'm zoomed in here quite a bit, so you can't really see that, but that's just to illustrate to you guys that what I did was I thought that we're going to get another wave higher, and that ADP started correcting here. So this was on the 3rd of December last year that I started looking at ADP, and I identified a zone that I would like to trade from. So this is how I would approach a breakout trade. If I'm under the opinion that I don't just want to jump into position when price reaches certain areas in that price zone that I identified before time, I would then wait for some sort of a reversal bar. And typically with stocks, I like to see that on a daily chart, or at the minimum a 4-hour chart, which is a bit more of an aggressive entry. So what I mean with breakout trades is that I want to see price move into an area that I'm interested in taking a long position, but I do want to see some sort of reaction. In this case, price reaching, let's say, that zone, acting with either my lower median line or my lower red warning line. This is this line down here, followed by a daily reversal sort of candlestick pattern before I will enter. And this is where I call them breakout trades, because I trade when price structure changes and after price confirmed that my, in this case, support zone should hold before I enter into a trade. So this was ADP on the 3rd of December. To all my subscribers, I identified the zone, and I thought that price would definitely make it into here. It was almost in that zone, and I didn't want one price to move lower because I was following market structure than this high that I labeled as 1 year. So at this stage, if price would have gone lower than a year, then this trade's probably wrong, and I would have been wrong. But anyway, so that was the 3rd of December. Guys, this was not done in hindsight. This was all done in real time. Then we look at the 4th of December. Price actually gapped lower. And this now, just looking at a 4-hour chart, so I could see on that particular day, we'll have 2 4-hour bars on during the trading session, because stock markets only open for a certain amount of time. Price reached my lower red warning line. It came in with my zone, and I could already see that it's struggling to break through, which is already a good sign. So, but not just entering right here, I wanted confirmation. So on the next day, which was the 5th of December, I had a nice bullish engulfing candle after price perfectly touched down the previous day at my lower red warning line and reversed higher. And this is what I mean by a breakout trade. I first waited for confirmation that my support zone might hold, and in this case my confirmation came in the form of a daily reversal candlestick. And then my breakout, or the way I see my breakout trades, would be taken at a level slightly above the previous day's high. So a breakout of a previous daily candle. Guys, this can obviously be changed around to lower time frames, etc., whatever your strategy might be. But in this case, I took a breakout trade, or I put in an order at 168.89, which was slightly above that day's high. Let's move on to the 6th of December. On the 6th of December, you'll see that price actually opened slightly. You can't really see it on the daily chart here, but it's opened slightly above my buy order. It came down. I got filled at the exact price I wanted to, and I was in the trade with both my targets set. You can't see the second target's much higher than that, and then my stop loss at 163.95. Then on the 9th of December, we had a nice gap upwards, and price shot way above, or not so way above, but slightly above my buy order. And at this stage I was thinking, great, we in a really good position here, and I ever so slightly trailed my stop to 166. And I also had a trade management level where I tightened my stop even more if price starts taking out important previous market structure. And then a few days later, something really interesting happened. It's the first time this happened to me, and I guess it was we were quite lucky when this occurred. Price actually came down on the 13th of December. Well, we stopped here on the previous slide, but price came down 1 day, 2 days, 3 days, and on the 4th day, ADP released a dividend payment. You see this blue little bubble at the bottom here of 0.91 cents. And what happens during a dividend payment is that your broker automatically, in this case, would have lowered my stop by 0.91 cents. As you could probably see in the previous slide, my stop was at 166. They automatically moved it lower and at 91 cents lower. And I was just lucky, didn't get stopped out. Price tested the lower red warning line once again and immediately moved higher. We also had momentum divergence, which I'm not showing on this chart, which is a great condition that also popped up between this low and this low. And even if I did get stopped out, I would have taken another entry at the same level, or perhaps move it a little bit lower above this daily bar, since my bias was still to the upside. But we were lucky we did not get stopped out of ADP, and price reversed higher again. And this is where ADP stands currently at the moment. Just get rid of some of these drawing tools. This is where the original stop was after they moved it down with a dividend. Price went up higher again since reached my first target, and I start using an upward sloping pitchfork in this case, so that I can then manage or trail my stop safely behind the market without getting stopped out too often. And then on Friday, price barely missed our second target, closed near the highs, and we trailed our stop quite aggressively to lie just slightly below this upper red warning line. Now, how things actually open today on the Monday, I might just consider, if things just open at the previous highs, to just take my profit and walk away. So a really nice, great trade. And in this case, what we're talking about today is breakout trades, but breakout trades in the sense of where we already had a confirmation at an area that I identified beforehand. Price reversed, it followed my plan, and then I would just enter using a daily chart. It could be a 4-hour chart. I'd like to use a daily chart, especially when it comes to stocks. And I took a breakout trade above the previous day's high. So in this case, it was a confirmation that price wanted to go higher. Yes, we did get another move lower, but we could neither obviously forecasted this, and we were just lucky, got into this trade. And in the end, this was just a correction. Price went higher, and we hopefully going to be at our second target, but we already trailed our stop for a very nice, decent return of more than, I think, about a 3-to-1 risk versus reward ratio of that one. So guys, this is how I approach breakout trades. So in the back of my mind, I would also obviously want to draw previous levels or lines at previous pivots on a daily or weekly, so that I know that I'm not trading into them when I have a position, in this case long. I don't want to be trading into a very strong pivot on the longer time frame, but as you know, most stocks are just making all-time highs at the moment, and it was just a good case of going with the trend and staying with the bullish bias that's present in the stocks at the moment. And that, in short, guys, is just a quick explanation of how I do my breakout trades. It's probably not a breakout trade per se at a very important level, but a breakout trade on a smaller time frame, zooming into price after, like I said, price reacting from a zone that I expect a reversal from. And when I did get that reversal, I just entered using a daily time frame after a reversal pattern. And this is a great example of a trade working out perfectly. We had a little bit of a sweat going on here. We almost got stopped, but sometimes luck is on your side. You do need some luck sometime in trading, but like I said before, just be careful if you do take breakout trades, you know what you're doing, and not take them at very important long-term levels or pivots from a daily or a weekly chart. That in short, guys, today's video. I hope you enjoyed it. If you haven't done so already, then don't forget to hit the like button or the subscribe button below. And I'll be back next week with another exciting video on another subject. We're also mentioning to some of our members currently at EPS, the Exponential Profit System, which is the strategy that I run for my members, that they can come up with new trade ideas, or sorry, trade video ideas, and then I would cover them for them. It's just a great way to interact with our members. Okay guys, thanks for watching, and until next time, this is Richard K from Price Action Income. Goodbye.